$767 per month. Average new car payment Q4 2025 per Experian. In 2020, $470. A $297 monthly increase. $3,564 more per year for the same necessity of getting to work. Average new car price, $50,000 as of April 2026 per Cox Automotive. In 2019, $38,000. A 31.6% increase in 6 years on a product Americans cannot stop needing. Prime borrowers, 661 to 780 credit. Take out loans averaging $45,944. At 7% over 72 months, the payment clears $800 per month before insurance or maintenance. Total auto loan debt, $1.667 trillion as of Q4 2025 per the New York Fed. Up 56.7% from 2015. In 1 decade, Americans added $600 billion in car debt. Average used payment, Q4 2025, $537 per month. Used prices up 27.6% since 2020, per J.D. Power. Down 3.2% year over year, but 5 years of compounding never reversed. Lenders stretch terms to 72, 84, even 96 months to fit $43,582 average loan balances into monthly budgets. Some credit unions now offer 10-year car loans. Industry veterans call it a debt trap. 90-day delinquency rate, 5.2% in Q4 2025. Crisis peak in 2010, 5.3%. 1/10 of a point from the worst reading in the post-financial crisis data series. The line has not turned. 1.73 million vehicles repossessed in 2024, the highest since the financial crisis. A repossession removes the transportation needed to keep the job. One missed payment triggers a cascade. 6.65% of subprime borrowers were 60-plus days late as of January 2026 per Fitch, the highest since January 1994, a 32-year record. Deep red in the data for 4 consecutive years. If you want to see the real numbers behind the headlines, subscribe to the Data Desk and hit the bell so you never miss a breakdown. Prime borrowers, 69.2% of retail financing per Experian. Delinquency rates stable. The stress is concentrated and spreading at the edges. The $767 is only the loan. Insurance averages $2,314 per year in 2026, up 26% since 2022 per bank rate. Another $193 per month. Total monthly car cost approaching $1,000 before a drop of gas. More Americans carry auto loans than mortgages. When the car payment breaks, the downstream effects, missed rent, missed groceries, missed credit minimums, compound fast. Buy here, pay here lenders hold 15.3% of the used car market per Experian Q4 2025. Rates approach credit card levels. The borrower with least flexibility pays the highest price for the same depreciating asset. The 32-year record is the consequence of pandemic-era loans on inflated vehicles at loosened standards, now aging into default. The balance sheets baked this in before the charts showed it. Part 2 answers how price, rate, and term moved simultaneously, each amplifying the others. The borrower profile absorbing the worst of all three is not who the headline number suggests. Banks, 31.8% of the auto loan market. Credit unions, 22.2%. Captive lenders, 19.3%. Buy here, pay here, 15.3% of used financing. The market is fragmented, and the riskiest slice is growing fastest. Banks hold 31.8%, but underwriting is tightening. Approval rates below 620 credit dropped sharply since 2023. The gap is being filled by higher-cost alternatives. The origin, 2021 to 2022. Stimulus boosted credit scores temporarily. Lenders approved borrowers who looked stronger than they were. Vehicles were overpriced. Standards were loose. Those vintages are aging into default now. 72-month loan on $43,582 at 7%. $12,000 in total interest. 84 months, $14,500. The lower monthly payment hides the total cost, until the borrower trades in and finds they owe more than the car is worth. Negative equity is the lock-in mechanism. A 2022 vehicle bought at peak price depreciates while the loan balance stays high. The owner cannot sell, trade in, or refinance without absorbing a cash loss first. Auto loans rose more than any other loan product in average size per Vantage score. Combined with average credit card balances of $6,580 per household, monthly debt service has reached pre-2008 levels for the median American. $1.064 trillion in 2015, $1.26 trillion in 2018, $1.43 trillion in 2021, $1.59 trillion in 2023, $1.667 trillion in 2025. Every node higher, no plateau, no reversal. A decade of uninterrupted growth in car debt. Repossessed vehicles go to auction, selling far below the outstanding balance. Lender absorbs the loss. Borrower absorbs the credit damage. In 2024, 1.73 million auctions. The loss rate is climbing. Fed rate hikes from 0.25% to 5.5% between 2022 and 2023 drove the payment surge directly. A 1% rate increase correlates with a 0.15% rise in 30-day delinquency. The full 525 basis point cycle delivered all of that at once. Under 35 households cannot qualify for a median new vehicle loan at current rates without stretching to 72 months or longer. The starter car, like the starter home, has effectively disappeared from the affordable price range. Rural borrowers, 2.4% 90-day delinquency versus 2.2% urban per industry data. In markets with no transit alternative, the car is not optional. Delinquency means the budget ran out, not that the borrower chose to stop. Insurance, up 26% since 2022. In Florida, Michigan, and Louisiana, annual premiums exceed $4,000. For a household at $767 in loan payments, the insurance bill can break the budget before the loan does. Subprime delinquencies surged 300% plus year over year. Absolute levels remain low, but the direction is new, per industry data. The stress is spreading up the credit ladder. The buffer is thinner than the headline rate shows. What does the 32-year record mean for car prices in 2026 and 2027? Drop your monthly car payment in the comments. New, used, or leased. The number looks very different by vehicle type. Part 3 has the forward data. Overall 90-day, 5.2%. 1/10 from the 2010 crisis peak of 5.3%. Subprime 60-day, 6.65%. Past any reading since 1994. 2 rings, 2 stories. The outer ring is where the crisis lives. Rising delinquencies flood the used market with repossessed vehicles. Used prices already down 3.2% year over year per J.D. Power. If repossessions hold at 2024 pace, the used market softens further through 2026. If subprime buyers are locked out through repossession, negative equity, or tighter underwriting, demand falls. Less demand, same supply, prices decline. The correction path exists. It is slow. Fed held rates at 3.50% to 3.75% through 2026. No cut forecast that lowers new auto loan rates below 6% before 2027. Payment relief is not coming from monetary policy this year. New vehicle prices up 0.5% year over year March 2026 per BLS. EV price cuts from Tesla and others add downward pressure, but the average transaction price across all segments remains near $50,000. Ride-hailing usage is rising in metro areas where the $1,000 monthly car cost no longer pencils out. Car ownership has risen for decades. The delinquency data may be accelerating the first sustained exit. $767 average payment. $1.667 trillion total debt. 6.65% subprime delinquency. 32-year record. 1.73 million repossessions. Those 4 numbers define the American auto loan market in 2026. Refinancing exists for borrowers not yet delinquent. Credit unions offer rates 1 to 2 points below bank rates. Borrowers at peak 2022 rates who maintained payments may qualify for meaningful monthly relief. Used prices down 3.2% year over year, the first sustained correction since the pandemic spike. For qualified buyers, the used market is better than any point since 2021. The window may not stay open long. Negative equity affects an estimated 1 in 4 borrowers who financed during 2021 to 2023. On a 72-month loan, the balance falls below vehicle value roughly 3 to 4 years from origination. That window opens in 2024 through 2026. The 2026 forward picture. Delinquency rates stay elevated. No rate relief. Used prices softening. New prices flat. The crisis stabilizes, while 2021 to 2023 vintage loans age out over the next 2 to 3 years. The most insulated position in this market? A paid-off vehicle. Every month without a car payment is $767 staying in the household budget. Keeping a reliable older car running is now a measurable financial advantage. $767 per month. $1.667 trillion in debt. A 32-year delinquency record. The car payment crisis is not abstract. It is inside 100 million household budgets right now. The data has been building for 5 years. What is your monthly car payment? New, used, or leased? Drop the number in the comments. And we will see you in the next data file.